Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. I am here to teach you to implement some of these different strategies into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Earlier this morning, wee hours of the morning, we had Draghi speaking. Didn't really do a whole lot to the markets, but we did get Great Britain's CPI year over year coming in at 2.1%, expected to be 2.2%. Remember, consumer price index. That shows whether or not there is inflation being passed on to the consumer, and at this point, we aren't really seeing that. We also got PPI input, which is producer price index. Input came in line with expectations at 1.1%. And last month's number was revised slightly down from 0.2% down to negative 0.2% down to a negative 0.8%. So not looking very good there. And then we move over to the core CPI in Great Britain, consumer price index, stripping out some of the more volatile aspects of that number, but it came in line with expectations at 1.8% as well. And then we move over here to the United States. We had Williams speaking, which I talked about yesterday. He was going to be talking today. And we also got our crude oil inventories. Came in at a build of 4.7 million barrels, expected to be a drawdown of 1.2 million barrels. Remember, last month was supposed to be a drawdown also, and we got a build of 5 million barrels. So both of those data points really beating the street by a lot, and that should cause crude oil to come off, and we're seeing that. One thing to note, tomorrow is a real big day for PMI numbers, flash PMI numbers coming out overseas as well. But let's talk about crude oil inventories being as much of a build as it is, almost, what is that? Almost 6 million barrel build over what was expected, causing crude oil to come off by about $1.90 right now, really starting to accelerate after, or the bearishness really starting to accelerate after that data point. Now that we're below this 23 Fibonacci, which lines up with $63, right? We only have the 200-day moving average, which has acted as quite a bit of support in the past, as you can see along this line here. Let me pull up a pin, and as we can see right here, this 200-day, this is the right here. This is the 200 simple moving average right here. So that, as you can see, as it's come along here, has acted as support. I'd expect that to act as support again. That's lining up with that. It lines up pretty closely to about $60 a barrel. So that is where we're looking for as support, $60. That's a psychological level that comes in line with that 200-day moving average. That should be our support, all right, at least for the short term. Then we've got this $59 and $58. I'm expecting this market to come all the way down and test this area here. So getting through that $60 support, more of a psychological level, but because it lines up with the simple moving average, that could act as more of a support than normal. That being said, I believe we're going to peel through that $60 barrel and move down into the 50s, at least by next week. Next week, I think we'll start seeing that trade happen there. Then we move over to gold futures. They found a bit of a bottom yesterday after, testing some key levels. I thought it was going to come down. As soon as we got down into this area here, to me, it looked like this area here, we would maybe really peel through quickly down to the 200-day. But we found that the market is seeing this as a bit of support in and around that area. As you can see, we could probably draw a line right here across that 1267-ish. So I think if I pull this up here, 1267, that's a pretty thick line, is basically where we're finding that support level. Sorry, I probably should make that arrow a little bit less obnoxious. But anyway, you can see that that is where we're finding that support level there. So let's see what this one does. If I can, this one's as big of a line. It's not that good. Never mind. So anyway, 1260-ish area is pretty, is showing in the past that that support, it should act as support again right there at 1267-ish area for gold futures. I'm out of gold, so I don't really have a dog in that fight. All right, bonds moving higher today with the equities trying to decide what they're wanting to do. This bonds just continue to try and trudge higher, making it look like interest rates are going to go lower. Not making my bearish bond position look very good today either. So that's continuing to grind higher. We got the VIX coming off a little bit today. We're still in the teens. That's because we're seeing the equities really try to see what's going on. Pretty much an inside day, as you can see here with the Dow Jones right inside of yesterday's range, down 70 points on the day though. Equities across the board pretty much negative territory as we're seeing it show up again in the NASDAQ. We are below this 61 Fibonacci, which is that 74.50 area that I've been talking about. Once we've gotten below that, yesterday we settled above that, but today peeling back through it. So again, I talked about this the last couple of days. This Fibonacci right here, this 61, doesn't really act as a support and resistance because the point of control is right here, and that is the POC is the magnet. So the market is wanting to draw down to that. So I don't think that the 74.50 area is really going to be something to look at like, all right, we've broken below that Fibonacci there, and now that support and resistance has been broken. I think because this magnet is right there, it's just going to peel right back and forth through that 61 Fibonacci, not as a support and resistance, because this point of control is really going to trump that more than anything. Move over to the E-mini S&Ps. They are above their support level here. This is the Fibonacci there. We can see that we haven't even really gone down there and test much of that at all, and nor have we even made an attempt to go down and test this point of control acting as a magnet. This support really has been defended. We're starting to gain acceptance, time and volume up at these levels. We could easily see the time volume node get shifted higher up into closer to where the point of control is for the volume as well. As the market accepts volume or time and volume higher, we're going to have that whole paradigm shift higher with the entire curve in a sense. All right, daily chart of the mini S&Ps. You can see the market pretty much neutral from overnight. They flushed themselves out coming into the day session. Market opened up and trying to print those, so pretty much a wash on all of that stuff. We were seeing a point of control moving higher there, but the market really just battling back and forth right now. Really no discernible direction at this point, I don't think. It's more going to be trying to see what is coming out with the earnings and how that's going to affect the overall markets going forward. All right, with earnings, Lowe's, this bum came out and did not work out very well for me. So in Lowe's, I went in there and had on the May, I'll write this stuff down. So I did the May weeklies on this. So the May weeklies, which expire on Friday, I went in and sold the May 104 puts. All right, so you can see that that didn't work out very well. And I originally sold those for around 50, I think it was around 58 cents or so. Obviously not working out, but this morning off the open, we can take a look at this. A couple of things what I was looking at on the open. I went and pulled up the Fibonacci, and sure enough, we take a look at the Fibonacci here, and it lines up with a lot of the different support and resistances that I have, being the value area high. The point of control is lining up with that 61 Fibonacci right there. That usually is a place where people turn around and look for a support level. It lines up perfectly with the point of control. So this is off of the morning's open. You can see we opened up right around here at around 101. We got a bit of a move higher. I thought my 104 puts were going to come back in once we peeled above this, get above the 200-day. I thought we would see a little bit more move to the upside, but went up to that 200-day moving average, and the market really started petering out rather quickly. We can take a look at this on the daily chart as well. If I go and take a look at the, let's take a look at a 10-day. So you can see off the open, off the earnings numbers, they missed on earnings. They came out 10 cents lower than expected, is 12 cents lower than expected, as you can see here. So on the open, we opened up and really started traveling higher, tried to get above the Fibonacci there, tried to stay in that psychological level of 100, which I thought would hold. Market started rallying up, but like I said, as soon as I started seeing that weakness happen, I looked to start to cover that immediately off the open. Seen too many of these earnings come out, especially when they're missing. They continue on throughout the day with that bearish tone. I've tried to be mechanical with many of these, and they haven't worked out this earnings season, so I'm staying away from that. I'm just going to cover the trades on the open, win, lose, or draw. So I decided to do that. The market started coming back off almost immediately. We could probably go into a shorter time frame there and see how it did not last very long. It was only off of the open that you got that market move, and you had to be really quick on it. So I was able to get out of those for, what was it, $2. It was about $2.80, I think, is where I ended up getting out of those on lows. So that one was a loser. Target, I went into this one, was a little bit more aggressive, but went into the May weeklies as well. And on these May weeklies, I ended up selling the 68 puts, May 68 puts, and I was able to collect about 53 cents for those and bought those back this morning for the May was for 3 cents. So nice trade there, but all in all, loser because of that lows trade. The winner on this one worked out quite nicely, but didn't quite make up for all of the loss in that lows trade. But I'm happy with this working out. Lows, not so happy. All right, that's what we got to do. Earnings trades, cover those right off the bat and take advantage of those opportunities when they come around. All right, that's all I got for you guys. Check out tomorrow's webinar. It is on a bullish bias, something similar to what we did here in Target with having a bullish bias, and then we build that strategy in and around what the underlying is giving us. It's not always just a condor or a long call spread. We are going to find out what is the most appropriate strategy for any given environment for a bullish move. All right, so check that out at Pro Trader Strategies. That's all I got for you. If you can't take that, take it easy.